How can small caps help? It's a great question, because why do we invest? We invest to save for the future, to accelerate our savings. Now, what small caps give you is alpha, and alpha is not easy to get, and it requires kind of earnings growth that's above economic growth. Small caps, because they've got a small base of capital on which to work, can really accelerate your savings rate and enable you to generate the kind of growth that you need to afford that house or to afford to retire that you can't get anywhere else. Well, dividends are important because they separate, I guess, investing from speculation. And dividends in a small cap scenario are important in not so much in the actual dividends often, but in the capacity to pay dividends. We've done 2 portfolios that have doubled the performance of the market and performed something like 30% a year. Now, the performance of these portfolios came about because some of these small caps were taken over. Others didn't produce dividends for all the period, but they certainly produced a lot of growth. So the return on equity component of small caps producing a superior return on your invested capital is what drives performance, and plus we get dividends as a bonus. Well, I think when a whale breaches the water, people often look at it and admire it, and I think in the same way people are admiring the resilience of the markets, given that Australia's economic activity is quite benign, or in a bit of a funk, as the Reserve Bank would probably say. But certainly I think in terms of individual portfolios it doesn't mean that much, because really there is a disconnect between individual stock performance and the market. Like, the correlation between the market and stocks was much higher a year ago than it is now. So when the market moves a year ago, if you bought a stock, it would generally move in line with the market. That correlation is broken down. We're in a stock pickers market. And what that means is that you can't rely on the market, you can't rely on a term deposit or on the ASX 200 or even on the All Ordinaries to produce the kind of growth that you need to save for your house, to save for a car. You really need to pick winners. Well, medtech's been a very successful sector for under the radar. We've actually produced an average return of the 13 or 14 stocks that we cover of 100+%. Why is that? Well, there's been some duds, but overall we've picked stocks that can really perform better, much better than the economic conditions in Australia or indeed the world, because these companies, if they're successful, can gain a slice of the of a global market. And as you said before, there is big demand for companies which reduce costs for hospitals, which improve life expectancy. And I think particularly some of the stocks we've chosen are at the low tech end of the spectrum, so there's not as much regulatory risk. Nanosonics really got sold off heavily, and a lot of that was because the US dollar, I guess, weakened against the Australian dollar, and it gets 90% of its revenues from the US, and it produces a medtech sterilisation technology that I guess is really in demand from hospitals wanting to sterilise probes. So it's a lot more efficient, like things that aren't metallic. So it's got a great niche, but I don't think the exchange rate is really indicative of where that stock's going to be in the future, considering it's trading on 10 times sales. So we took advantage of that sell-off, and it's climbed something like 33% in the past few months, and that's the kind of quick gain that you can make in this sector. Medical developments has climbed 25–30%. I mean, that's a classic example of a stock which a lot of people can easily understand, because many Australians' first sort of high would have been experienced from from the analgesic green whistle, which is a non-narcotic pain relief. And that's been in Australia for a long time, but now it's being rolled out around the world. And it got some traction in the UK, whereby every ambulance is required to use the green whistle. So really what we're looking at here is a company that is trading on a big sales multiple, but it has global growth, and it's starting to achieve global growth as its flagship product is being rolled out around the world. We've done a report on lithium because there is a lot of hype in that area, but there are a lot of lithium stocks. But I think there's certainly some lithium stocks that are separating themselves out in recent months as producers and as near-term producers, and we're sort of highlighting those stocks. The demand for lithium should never be underestimated. I think in order to facilitate the kind of product that's needed for the demand we're seeing in electric vehicles, you're going to need 35 gigafactories of Tesla's gigafactories, and that's going to require a lot of lithium. And the lithium that's been produced so far has been produced from brine wells. But in Australia we have a competitive edge in rock lithium, and I think that's starting to get to scale. They're starting to get really big mines in Australia, and that means that these companies that have offtake agreements are really in a box position to capitalise on that demand, on that battery demand.